All right, listen. Thursday could get weird in silver, and it could happen before New York even opens. Silver just put in a strong move, and when silver starts acting like this, it doesn't politely wait for the 9:30 bell. A lot of the most important moves in this market don't start on CNBC. They start overnight, when liquidity is thinner, spreads are wider, and one burst of buying or selling can shove price into a totally different zone before most people even wake up. So today I'm giving you a clean Thursday warning and a simple playbook. Not hype, not fantasy price targets. Just what I'm watching. What would confirm strength, what would confirm a trap, and why the first move tomorrow morning could set the tone for the entire day. If you're a silver investor, this is exactly the kind of session where people get emotional, and emotion is expensive. This isn't just normal market behavior. Here are the three factors that converge today and set up Thursday. First, silver is moving like a high volatility instrument again. When silver can jump hard in a short window, it tells you the market is being driven by positioning, not just slow physical buying. Positioning is what creates those sudden, oh wow candles. And when positioning is in control, the market becomes extremely sensitive to levels, because stops, margin, and forced trades start to matter more than opinions. That means Thursday morning isn't just another day. It's a potential continuation day or a reversal day. And those two outcomes start looking obvious very quickly, sometimes within the first hour of serious trading. Second, the macro environment is still unstable. Metals are trapped between two big forces that keep switching places. One force is the safe haven impulse. When people feel uncertain, they reach for gold, and silver often gets dragged along. The other force is the rates and dollar impulse. When the market decides rates might stay higher or the dollar firms up, metals can get hit fast. When those two forces are fighting each other, you don't get a calm trend. You get spikes and snapbacks. You get green candles that feel unstoppable, and then you get the rug pull. That's exactly why the overnight session matters. The market is basically trying to decide which story is dominant, and the decision can begin forming before the US Open. Third, silver's structure magnifies every shock. Silver is not the deepest market in the world. It can feel liquid until it doesn't. And when liquidity gets patchy, price moves become gappy and violent. That's when you see the classic pattern: a fast move into a level, a bunch of stops get triggered, and suddenly the move feeds on itself. Now you're not just watching silver, you're watching a chain reaction. And chain reactions often start when fewer participants are watching, like the overnight session. Now let's get into the evidence, because I want this to be useful, not dramatic. Here's what they're not showing on CNBC. In high volatility regimes, tomorrow's most important question is not, where is silver going this month? The question is, what kind of move is this? Is this a controlled, healthy continuation where dips get bought? Or is this a late-stage chase where the next move is designed to flush people out? Professionals think in scenarios, so here are the two clean scenarios for Thursday, in plain English. Scenario 1. The overnight strength holds. In this scenario, silver doesn't just spike in the overnight session, it holds the gains. You wake up and silver is still firm, not fading. When that happens, it usually means the buying is not just a quick stop run. It means someone is comfortable holding exposure, not just flipping it. What does that look like in real time? It looks like the first pullback after the overnight move gets bought quickly. You don't see a slow bleed. You see buyers step in with urgency, like, no, you're not getting it cheaper. If we see that behavior, Thursday can turn into a trend day. Not guaranteed, but the odds go up. Scenario 2. The overnight pop is a trap. This is the one that catches retail over and over. The market pushes price up in thin liquidity, everyone wakes up excited, and then as real liquidity comes online in the US session, sellers hit it hard. Why does that happen? Because overnight moves can be exaggerated. And if big players want to sell into strength, they prefer selling into a crowd that's emotionally buying. The easiest way to create that crowd is to make price look unstoppable before the open. If tomorrow morning starts with excitement and then you see silver fading steadily, lower highs, weak bounces, and no urgency from buyers, that's when you need to respect the possibility that the market just set a trap. And again, I'm not saying buy or sell, I'm saying recognize the behavior. The behavior tells you which scenario is more likely. Now, there's a simple way to think about the overnight session that most people never hear. Overnight is like the market's lie detector test, because when liquidity is thin, you find out what the market really wants to do. It's raw, it's less polished, and that's why it matters. If silver can't even hold itself up overnight, it's a warning that the move is fragile. If silver stays firm overnight and holds into the early US hours, it's a warning that momentum is real. Now I want to make this practical with a clean Thursday morning checklist. 3 things. Number 1, direction of the first real pullback. Not the first move up or down, the first pullback after a move. If silver runs up overnight, then pulls back, and buyers defend it quickly, that's strength. If silver runs up overnight, then pulls back, and every bounce gets sold, that's weakness. Number 2, speed. In strong trend days, corrections are fast and shallow. The market doesn't give you time to think. In weaker trap days, the market grinds, it bleeds, it gives you false hope. So watch the tempo. Tempo tells you who's in control. Number 3, gold's behavior versus silver. This is a huge tell. When silver is leading and gold stays stable, silver can run. When silver is leading and gold starts slipping, silver often gets yanked harder than people expect because silver is the more emotional leveraged metal. So if you see gold getting heavy while silver is hyped up, respect that mismatch. That mismatch is where sharp reversals are born. Now let me zoom out and give you the why behind all this, because understanding why helps you stay calm. We've seen this exact pattern before. History is repeating itself in the sense that silver loves to compress people emotionally. In 2011, silver made people feel like geniuses and then made them feel stupid, fast. The metal didn't just move, it tested psychology. In 2020, markets taught everyone a brutal lesson. The biggest moves often begin when you think nothing is happening. Overnight. Early. Quiet. And in both periods, the people who survived weren't the ones with the best predictions. They were the ones with the best process. They had a plan for what they'd do if the market ripped. They had a plan for what they'd do if the market dumped. And most importantly, they didn't confuse a fast move with certainty. That's the trap in silver. A fast move feels like proof. It's not proof, it's pressure. Now let's make this personal, because I know exactly what happens to real people watching this market. Let's make this personal. If you're holding silver and you wake up tomorrow and it's ripping, your brain will start whispering, don't miss it. If you wake up tomorrow and it's dumping, your brain will start whispering, get me out. That's not analysis, that's survival wiring, and the market knows it. That's why high volatility regimes exist, because volatility is the tool that transfers money from impatient hands to disciplined hands. So here's a grounding exercise that actually helps. Instead of asking, where is silver going? Ask, what would make me overreact today? If your answer is a big green candle, you already know your weakness. If your answer is like a sharp drop, you already know your weakness. And once you know your weakness, you can plan around it. For example, if a 2% move in a day makes you emotional, your position sizing might be too big for your temperament. That's not a judgment. That's just reality. Silver is not a set it and forget it asset in a volatility regime. It demands respect. Now let's bring this home with the simplest framing possible. Look, the question isn't whether Thursday will be volatile. The pattern shows the path. When silver starts moving aggressively, the next session often brings follow-through or a shakeout. The real question is, will the market confirm strength overnight, or will it bait everyone and reverse once the US session is fully awake? Right now, silver is in a zone where the overnight session can matter more than people think. If we wake up and silver has already made the move, don't chase the emotion. Watch the behavior. Watch the first pullback. Watch the tempo. Watch gold's tone. And whatever happens, remember, you don't get paid for excitement. You get paid for good decisions. I share real-time updates and deeper analysis on social media. For those wanting exclusive research, members-only analysis, or early warnings, there's a premium level. This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations, but the data speaks for itself. All right, before you go, 3 quick things. 1, drop a comment below. Tell me where you're watching from. And give me your prediction. Where do you think silver is headed by the end of Thursday? 2, if you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment "Truth wins" so the algorithm knows you're here for the original. 3, next video drops soon, and I'm covering the one overnight signal that tends to show up right before silver makes its biggest weekly move. It's flashing more often in this regime, and most people don't even know to look for it. You won't want to miss it. See you there.